Hello and welcome. You're tuned into Market Cafe with me, Lisa Fernandez, and here I have my co-anchor, Snehi Shah. Very good morning to you, Snehi. And we are at the start of the fresh day of trade, and we will be talking about the news that will be in focus, both on the international as well as the domestic front. On the domestic side, of course, we'll be talking about the stocks that will be in action on the back of brokerages, news, announcements, the stocks that will be buzzing and in action on the back of these. But first, let's go on the international front. Say we know that the market was shut on account of Independence Day celebration in the US market. Right. But what else is in store in the international front?
Right. So good morning to all our viewers, and let me take you through the global handover that's coming in. And US stock futures were little changed on Tuesday night as Wall Street looks to resume a holiday shortened week, as Lisa mentioned. Dow Jones Industrial Average Futures fell 0.1%, S&P 500 and Nasdaq 100 futures also dipped very marginally as well. And markets were closed on Tuesday on account of the 4th of July holiday, and they closed earlier on Monday as well. So investors are coming off of a positive session on Monday, which kicked off the start of a new month, a new quarter, as well as a new half year for traders in the US. All three indices rose slightly during the shortened trading day on Monday as well. And now let's shift focus to Europe then, and European markets closed slightly higher on Tuesday, with investors in a cautious mood ahead of data releases and the start of the second quarter earnings season. The pan-European stock 600 ended very nominally higher, 0.1% higher, after a day of muted trade. Healthcare and tech stocks led gains up 0.5% as banking stocks dropped 0.6%. So a very mixed handover coming in from US as well as Europe. But let's see how that pans out for our Wall Street, which is our Dalal Street today morning. And this is on the global front, Lisa, but also take us through what crude and other commodities did.
Very well, Snehi. Actually, on one side, we have the supply issues coming in because of the supply cut seen from Saudi Arabia as well as Russia, and that amounts to 1.5% of the global supply of oil. And on the other hand, we have the weak demand. Investors are concerned about the weak demand coming in from because of the weak economic data. There is a slump in global factories activity as per a business survey, and this is because of sluggish demand both in China as well as Europe. And in China, the PMI, which came, that was lower than what was earlier month in May. It came to around 50.5, dropped in June from 50.9 in May. And even the US manufacturing, that fell in June, and it reached levels which was seen in the initial wave of the COVID-19 pandemic. So if we look at the crude oil prices, the WTI crude, it's steady at 1.8%, and it's at $71 per barrel. But the Brent crude, it's down 0.4%, and it's at $75 per barrel. So that's on the crude. But now moving on to the events on the global front, we have the FOMC issues. It will be issuing the minutes on the June policy meet. Services as well as composite PMI data will be from China, UK, Eurozone. And on the corporate action front, back home, Solar Active Pharma will be mulling a proposal on the right issue, Kalpataru projects. It's the last day to buy for a dividend, and the stocks that will be trading ex-dividend are Emphasis, Sundaram Finance, and Inox Wind will be holding their investor meet, and the important AGMs will be held by Tata Steel as well as SEAT. And now on the auto front, we have important launches coming in from Maruti Suzuki. They'll be launching Invicto, while Bajaj will be launching Triumph Speed 400, Scrambler 400 X launch.
Alright, so these are all the important events that you should be keeping on your radar today as well as for the rest of the week. But let's also take a look at what else is happening across the globe other than markets, and let's bring you a weather update then. And if you found yourself reeling in the heat at the start of the week, this is why. Global temperatures hit a record high on Monday, underscoring the dangers of increasing carbon emissions. The average world temperature stood at 17 degrees Celsius. Meanwhile, the UN Weather Agency has flagged the onset of El Nino, and the WMO, or the World Meteorological Organization, sees a 90% chance of the phenomenon persisting through the second half of the year.
But now shifting focus to the social media world, the giant Twitter, which received a lot of flack for its recently implemented usage limits, and the company backs the announcement saying that it will help them detect and eliminate bots, reiterating that the restrictions have attracted only a small percentage of users. Well, in a tweet, the newly appointed Linda Yaccarino, she released her first public comment after taking over as CEO. She tweeted and she said that, I quote, "When you have a mission like Twitter, you need to make big moves to keep strengthening the platform."
Alright, and we might be seeing a new listing on Wall Street very soon then, because China-founded online retailer Shein is reportedly in talks with at least 3 investment banks about a potential US initial public offering. It has also been in talks with the New York Stock Exchange and Nasdaq. Sources close to the matter said banking giants like Goldman Sachs, Morgan Stanley and JP Morgan Chase are among the few helping with the preparation for the IPO, which is recently valued at $60 billion, and Shein could become the most valuable China-founded company to go public in the US.
And US President is calling for stricter gun control. US President Joe Biden, he has once again called for stricter gun control, a ban on semi-automatic rifles. His comments comes 1 year after a mass shooting at Highland Park, Illinois, the 4th of July parade that killed 7 people and wounded nearly 50 others. Biden, in his statement, has called upon Republican legislators to join him in implementing what he calls common sense reforms. Important to note that even this year, a slew of shootings plagued the country over the long 4th of July weekend.
Alright, let's shift focus to China then, and China is set to impose new export restrictions on 2 materials crucial to making semiconductors and other electronic components, and the move is likely to affect global major companies. So why is this move significant? Listen in.
This marks a major escalation in its trade war with the West. Talking about China. China has announced that it's going to impose curbs on the exports of 2 rather obscure yet rather crucial metals. These are gallium and germanium. So according to Beijing, the export curbs are going to kick in from the 1st of August. Exporters of these 2 metals are now going to need to apply for licenses from the Commerce Ministry, and they will have to be disclosing details of overseas buyers. So why gallium and germanium? What are these metals and what makes them so important? Well, firstly, both these metals are classified as minor metals, and they are produced in small concentrations as a byproduct from refineries that are focused on other significant metals. But more importantly, both gallium and germanium have specialized usage in strategic industries like compound semiconductors, like communications equipments, radars, solar panels, space exploration, and there are a significant number of other uses. So Chinese curbs could result in a significant spike in prices of both these metals. And remember, processing costs for these metals are quite high, but over the years, China has been exporting both metals at relatively cheaper rates. Now what makes matters worse is the fact that China has almost an iron grip over the production of both these metals, both gallium and germanium. And according to a European Union study, China accounts for 94% of gallium supply and 83% of germanium. Since China had been exporting both these metals rather cheap, production in other countries remained quite low. Barring China, only Russia, Ukraine, South Korea, Japan, the US and Belgium produce these metals. So Chinese curbs could send the Western world into a rush to look for alternatives. But given usage in strategic industries, the export curbs could have a far-reaching impact and could further heighten already existing tensions between China and the West.
And now shifting focus to the auto world, American cult bike maker Harley Davidson has launched its most affordable bike in India, priced between rupees 2.29 lakh to rupees 2.69 lakh, and that's in partnership with Hero Motor, which will also launch the bike on the same platform in the next few months. Well, Hero Motor will later develop and sell these bikes under its own brand. The X440 bike challenges the dominance of Royal Enfield in mid-range premium bike segment in India. And ET Now's Sumit Chaturvedi actually took a test ride of the bike to see if it really lives up to the expectations.
We are at the Heroes test facility in Jaipur and we are today going to ride Harley Davidson X440. Well, the most affordable and the most, we can say that, lower cc bike Harley Davidson has built. This has been designed in India. Talking about the design cues here, it's complete, we can say that, a street bike. It looks like a complete bike which is nimble, easy to handle. It has a straight handlebar, which means that it's easy to maneuver in city conditions. Well, overall, it's not been loaded with a lot of features. When we talk about features, instrumental panel we are talking about, it's not been loaded a lot of them, just one headlight and one instrument panel. That's it. It gives it a very simple feel. It gives it a feel of a street bike. Overall, it's one-cylinder engine of 440cc, liquid cooled and air cooled. It's got all other features for safety like ABS, anti-lock braking system. It has got that also. So it's overall a bike that can be good for everyday commuting. It's also something which is good for adventure, sports adventure category. So it's a bike which is powerful yet very agile. The cornerings are very good. This category of market is expanding fast. It's got a premium segment customers that are willing to spend money to get adventure and everyday riding as well. That's why it's special. The Harley Davidson, overall, this bike is made for India, made by Hero. Hero is also going to build many more bikes on this platform, especially for city market. It's not a rural market bike or commuter market bike. It's a very premium lifestyle segment bike, and that's what they want to do with this.
Alright, then let's slip into a very short break, but don't go anywhere. We've got more news and updates for you right back. Hi there, good morning, welcome back. You're watching Market Cafe on ET Now. Now that we've seen what the global handover largely looks like, let's also take a look at what the Asian markets are doing this morning. And Asian Pacific markets have largely fallen as investors await the release of private surveys on services activities in China as well as Japan. And June inflation reports for Philippines and Thailand will also be published. Other than that, Asian markets largely looking in the red, almost all down very nominally. But still, let's take a look at what Shanghai is doing. And Shanghai is down almost 0.3%. So that's Shanghai for you, 11.5 points lower. Let's also move to Hang Seng and almost 0.7%, 0.8% lower in trade coming in for Hang Seng as well, also in the red. Kospi as well, 0.3% lower, 8 points drop for Kospi as well this morning. Largely all of these indices are looking in the red. ASX 200 now, which is Australia's index, is down almost 0.2% in trade, and also Australia will be, the Reserve Bank of Australia has held rates to 4.1% on Tuesday, so that might have a nominal impact on the Australian index as well. So these are all the Asian markets nominally in the red, but let's see how this pans out for our Indian markets opening in a short while. Right, and it's also YouGrow Foundation Day today, and we have a word from the VC and MD Sachindra Nath on their growth plans. Listen in.
It is a matter of great privilege to spend or to see the first 5-year journey of YouGrow. YouGrow Foundation Day is a day of reminder to us about this mission to serve more than 1% of outstanding MSME credit in India, to serve 1 million customer in near future, and to be the largest MSME financing institution of India. Of our first 5-year journey, the almost 2.5 years were most difficult period of time for lending institution like us. We have, during this period of time, we saw the crisis of COVID, and prior to that, the credit crisis by ILF happened through ILFS, DHFL and others. But we have not deterred from our mission to be a solution provider through the lens of data and technology and build a robust credit platform. Over last few years, we have reached the milestone of 6,000 crore, and we continue to progress well on that. We intend to build a business which benefits our small businesses, and our method of underwriting through the lens of data and high degree of specialization ensures that we understand the MSME customer well, and we break the myth that small businesses are highly risky. Our view is that in the changing landscape of India, which is the Bharat, MSME would be the most resilient part of our credit economy. We continue to serve all of our customers well for the next decade, and hopefully make this a very enjoyable moment for all our stakeholders. Be the shareholders, be our liability and providers and lenders, be our partners, and more importantly, our people and customers.
And with that, it's time to slip into a short break. More news and updates on the other side of the break, so stay tuned.
Hi there and welcome back to Market Cafes. Thanks for staying tuned to ET Now. Now, the semi-annual recategorization of stocks by AMFI will see several changes. Stocks like Mankind Pharma, JSPL and PNB could be reclassified as large caps, while there are several small cap entries with recent IPOs. My colleague Sharad joins in with the details. Good morning, Sharad.
Well, yes, in focus we'll be having the stocks, especially on the AMFI's semi-annual categorization, and do remember this is for the second half of calendar year 2023. The list is expected to come out soon, and the fresh list will be valid till January 2024. Now, the stocks itself, Mankind Pharma, of course, recently listed, is to come in the large cap category, but from the mid cap to large cap, we see stocks such as JSPL, IDBI Bank, Canara Bank, TVS Motors moving into the list. But there is some stocks which will be actually moving down from large cap to mid cap segment, and these names include Nykaa, JSW Energy, Industars, Page Industries, and also Macrotech Developers. Now, from the small cap to mid cap, if you see the migration, the stocks which would be in focus would be stocks such as FACT, Bank of Maharashtra, Punjab Sind Bank, and Jindal Stainless. While from the mid cap to the small cap space, there is a certain migration happening with stocks such as Piramal Pharma, Fine Organic, Nippon AMC, as well as stocks such as Imami. But there are some new entries also in the small cap space coming in, and of course these are the newly listed ones, and these certain names are there such as IQ Lighting, Avalon Tech, Divki, Talk Transfer, Radiant Cash System, as well as Global Services.
Thank you, Sharad, for giving us the stocks that will be in focus on the back of the AMFI recategorization. But LTI Mindtree has entered the big league. The subsidiary of L&T will replace HDFC on Nifty 50 index on July 13th. And this rejig, it comes after HDFC's merger with its twin entity, HDFC Bank. Well, Ashesha is here with us, and she's joining in with the details. Ashesha, tell us what it means for LTI Mindtree in terms of inflows coming in.
Well, absolutely. LTI Mindtree is all set to replace HDFC in the Nifty 50 index with effect from the 13th of July. This, as you mentioned, is because of the merger that was announced between HDFC and HDFC Bank, which came into effect from the 1st of July. And HDFC shares will get delisted from the exchanges on the 13th of July. And now LTI Mindtree will get included. As you mentioned, yes, this was the buzz, and hence this has come in more or less on expected lines. In fact, Nuvama had come out with a report some time back where they said that they expect about 150 to 160 million US dollars of inflows as a result of LTI Mindtree's inclusion in the Nifty 50 index. Let's talk about LTI Mindtree then. This is the 5th largest IT company in terms of market capitalization. In fact, it replaced HCL Tech after the merger that was announced between LTI and Mindtree, and now it is the 5th largest IT company in terms of market capitalization. As far as its growth prospects are concerned, the management had in 4th quarter highlighted that they expect double-digit growth in FY24 as far as volume growth is concerned. Margins, meanwhile, they expect margins in the range of 17 to 18%. 17 to 18% margins is what these companies registered before they got merged, LTI and Mindtree, and they expect to get there very soon. As far as deferments are concerned, the management had highlighted that they are not seeing any deferments. Slowdown in decision making is what LTI Mindtree had highlighted in the 1st quarter. However, the prospects look strong, LTI Mindtree being included, and hence this counter will be in focus today. Apart from this, JSPL will also be in focus, and that is because JSPL will be included in the Nifty 100 index. So on account of these two inclusions taking place, both of these counters will be in focus tomorrow.
Right, thanks Sresha for all those details. Moving on then, the much anticipated IDFC and IDFC Bank merger has been approved by the boards. The bank said the share exchange ratio for the amalgamation will be 155 equity shares of IDFC First Bank for every 100 equity shares of IDFC. We caught up with V. Vaidyanathan, who's the Managing Director and CEO of IDFC First Bank, and he says that the merger has removed the overhang of 40% on shareholders. Let's listen in.
In the short run, let me just say that there is no overhang of someone holding 40% and what they're going to do with it, and there was so much of market speculation. All that is gone. Let me say speculation is gone. We are going to simply issue shares of IDFC Bank to the shareholders of Limited. Against 1.66, we're going to issue 1.55. That's it. So that's clean. Now, so speculation over in the short run and clarity. In the long run, if you think about it, this becomes a perennial institution because there is no promoter. So think of like how ICICI Bank, HDFC Bank, JP Morgan, whatever. You think of large institutions, they with a diversified public shareholding, they grow and grow and grow and grow forever. Now that corporate structure issues are all out of the way, the core of the bank will now begin to emerge even more to people. The short point is that bank has a really very good business model, very profitable, very high asset quality. Corporate governance is really top class. So I feel that everybody, like once in your channel, I said, your non-believers will become believers about 3-4 quarters ago. Now you'll all watch and see what this bank will turn out to be. I think it'll be really good. Now onwards, let me just say it's more like settling down, because I think now we should forward to a very stable build-up of the deposits, of the loan book, and let me just say all the adventures of 5 years of these 10 years are, let me say, behind us. And now let me just say it's more a stable performance and a stable lookout, let me say, over the next decade.
And that was on IDFC First Bank's optimistic growth plans. But now shifting focus on the sugar sector, in a big boost for Centre's ethanol blending target and also to promote ease of doing business, the government will tomorrow launch Sugar Ethanol Portal, and this portal will facilitate single sign-on, which will help the sugar mills approvals, licenses as well as data processing. Samir Dikshit is here with the details.
The exclusive news that we are picking up from government sources is that to promote ease of doing business and also to keep a track on the ethanol blending target of the government, the Department of Food and Public Distribution is all set to a sugar ethanol portal. Now this sugar ethanol portal will be launched by Union Cabinet Minister Piyush Goyal on 5th of July, and this sugar ethanol portal is being developed, it is being designed on the line of government's national single window system for business facilitation. Now this portal is being developed as a combined effort by DPIIT, Department of Food and Public Distribution, and Invest India. Now this is going to be a dynamic dashboard with a regular monitoring of sugar production, ethanol production, even the distribution will also be monitored, and not just this. The dues of the cane farmers, that will also be monitored on a real-time basis through this portal. What we are also understanding from the sources that this portal will also facilitate regarding a single sign-on. Not just this, the sugar mill owner, they can not only provide the data, the facts regarding the sugar production or the ethanol production, but can also apply for almost all the approvals and licenses of government. So ease of doing business is what that is being aimed to promote through this sugar ethanol portal. But one key aspect is that through this portal, government will keep a tab on all the production cycle of sugar, ethanol, and will also check that whatever the ethanol blending target government is currently having, how far they are able to meet that target. So that is also being closely monitored through this portal. Now this portal, after being launched, will also help the farmers, the sugar farmers, that they can get to know that whatever their dues are and how easily they are being disbursed by the sugar mill owners. Now this portal will also help to bring in all the cane commissioner, the state cane commissioner, as well as the sugar mill owners on the same platform, and this will help to resolve if any issues are there regarding the sugar production or the dues that the cane farmers has. So this sugar ethanol portal is all set to be launched, and this the government aims to promote ease of doing business as well as to keep a track on the ethanol blending target.
All right, thanks Samir for all those details. And Startup 20 Shikhar was held in Gurugram, which was a 2-day event and a part of the G20 India Summit. Delegated from G20 partner nations and other invitees were a part of the event. Department of Promotion of Industry and Internal Trade, which is the DPIIT, Joint Secretary spoke with ET Now about the landscape of self-governance in the country and the government's initiatives towards it. Here's an excerpt of that conversation.
Hasn't the government always been batting for this right from the very beginning? With the fact that right from 2016 we've asked the ecosystem to grow and nurture on their own. There is, for so far we've only been creating an ecosystem that they are self-nurturing, self-growing. We've only provided about say 57, 56 regulatory reforms for furthering their growth. The entire ecosystem is actually running and growing on their own. Have the National Startup Advisory Council, which is again one of the most prime examples of an industry-led advisory council. They themselves define what is required for the governance or for the example for helping the ecosystem to grow further, and they themselves do it for it. So I think that's a very great example, and this has been the stance of the government right from the very beginning. It's not something new, and it's something that he firmly believed in. And that's why he mentioned it today in his speech.
And every day is a record-shattering day near life highs as far as markets are concerned. There are several spaces that have been exuberant. Certain stocks are in fact trading much higher than their highest target on the street. Well, Somit is joining in with the details. Somit, tell us which are these stocks that have run up too fast and they are too hot, and is there any case for correction?
We have come out with this list from the Bloomberg terminal, and the filters that we have used is firstly there are at least 5 analyst recommendations on these companies, and all the share prices of these companies are trading above the highest target price that is there on the street. It is not the consensus target price but the highest target price on the street, and we have come out with 7 names. Firstly on the list is New India Assurance, where the share prices are trading nearly 12% higher compared to the highest target price, and this run up on the share prices could be on the back of strong Q4 numbers, cheap valuations, but analysts continue to remain on the sidelines because they are expecting weak underwriting profits and higher expenses going forward. When it comes to GI&TD, that stock is trading around 11% higher compared to its highest target price on the stress, and this could be on the back of government's strong push towards renewable energy, which could boost the new transmission capex cycle going ahead. But analysts continue to remain bearish on the stock because they are saying that the growth in orders and the margins are still factoring, that the street is factoring in is quite aggressive. When it comes to India Cement, it is a strong demand growth and lower petcoke prices, but analysts continue to remain on the sidelines because of lower price push, limited debt reduction visibility and poor ROEs of the company. When it comes to data pattern, it is the government's focus towards defense and domestic production that has led to the sharp run up in the share prices. When it comes to Intellect Design Arena, now if you see strong deal wins, 20% revenue growth guidance and the buzz of a potential stake sale by promoter has led to this rise in the share prices. And when it comes to ICICI Securities, now the surge was recently seen when the company announced its delisting. Other than that, there is no other factor that could lead to such a boost in the share prices of the company. And lastly, when it comes to Torrent Power, it's overvalued and lower LNG prices, which could curb trading gains, have kept analysts on the sidelines, and they're still expecting the share prices to fall going ahead.
Welcome back, and we are at that part of the show where we talk about, we are on the domestic side, where we talk about all the stocks, the news that will be in action and will be buzzing on the back of brokerages and other news. Q1 has ended, and we will be talking about the updates coming in from Q1. But first on the GIFT Nifty, it's flat, it's trading flat, and it's just 2 points up. It's 2 points down, sorry, and that hints at a muted start for the Indian broader index too. So now shifting focus on the quarterly updates of banking names pouring in with names such as AU Finance, AU Small Finance Bank, Bandhan Bank and RBL Bank, and IndusInd as well will be in focus today. Well, how have they performed? Vamakshi is here joining with some more details. Good morning, Vamakshi.
Well, yes, good morning. Let's first start off with IndusInd Bank. Now, net advances for the company stood at around 3 lakh crore as of June 2023, which is an uptick of almost 21% coming in as far as the year-on-year basis is concerned. Deposit growth, however, continued to remain a laggard at nearly 14.6% year-on-year. CASA ratio, however, in line with most of the other banks, has seen a moderation sequentially to 39.9%. Apart from that, we also have an update coming in from EU Small Finance Bank, wherein we saw that the credit growth has remained strong for this quarter. Gross advances saw an uptick of almost 29% on a year-on-year basis. Total deposits also grew healthily by almost 27% year-on-year, but it is the CASA ratio, like I pointed out earlier, which has actually moderated. 35% is where it's at. Bandhan Bank, on the other hand, has reported a weak update as far as Q1 is concerned. Loan growth was only 7% on a year-on-year basis, which is very weak as compared to the rest of its peers. CASA ratio has also moderated for this counter at nearly 36% versus 43% that we saw in the same quarter last year. Apart from that, we also have an update coming in from RBL Bank, but on the other hand, RBL Bank has reported a strong set of numbers. Strong growth was seen in advances, wherein advances were up by almost 20% year-on-year. Deposit growth came in at almost 8% year-on-year. CASA ratio, unlike the other banks, has improved for RBL Bank but has remained flat sequentially at 37.3%. Macrotech Developers, a realty name, the company reported its Q1 sales collections as well as debt data, and overall when we look at the update, that is a bit of mixed update coming in from Macrotech. The company reported the best ever Q1 pre-sales performance. Pre-sales saw an uptick of almost 17% on a year-on-year basis and 11% sequentially. In fact, it is the fourth consecutive quarter wherein the company has reported pre-sales of over 3,000 crores. Collections, however, took a hit. They were down 8% on a year-on-year basis and nearly 18% sequentially, mainly due to seasonality. Net debt, however, also rose sequentially, and that was mainly on account of business development investment. So largely, those were all the Q1 updates that you should keep an eye out for.
Thanks, Somakshi, for all those Q1 updates coming in from the banking space as well as Macrotech Developers. But stay on with us then, because we also have brokerage notes that we're getting in this morning from Jefferies, CLSA as well as Spark Capital. So Somakshi, what are the brokerages keeping on their radar this morning?
Off with Dixon Tech, we have a note coming in from Jefferies, and they have highlighted that the risk for this counter is stretched post a sharp rally seen in Dixon. The current weak demand actually poses a downside risk versus expectations of a high growth forecast. Now, on the back of that, Jefferies has actually gone ahead and downgraded its rating on Dixon to hold from buy, but nevertheless they've hiked their target price by almost 200 rupees to 4,450 per share. Apart from that, cement stocks will also be on our radar. We have a note coming in from CLSA, and they have highlighted that strong demand as well as cost reduction seemed fairly priced in. On spot cement prices, cost and demand run rate are expecting to see 5 to 12% upgrades to consensus. With the sharp rally, most stocks are trading above the historic median, and overall in the cement pack, they prefer Ultratech as well as Dalmia Bharat. Now, guidance on cost as well as current demand outlook would be some of the important factors to watch out for in the upcoming results. Apart from that, lastly, we will focus in on CCL products. We have a note coming in from Spark Capital, and they have highlighted that the company is planning to double its capacity by FY25. In fact, Spark is expecting a revenue CAGR of 22% and earnings CAGR of almost 26% from FY23 to FY27. They also believe that the company's increasing share of soluble coffee could aid growth. The underlying business strength is facilitating it to gain further market share as well. Domestic business is also gaining traction, mainly led by the distribution expansion. So largely, given all these positive factors, Spark Capital has initiated coverage on CCL products with a buy rating, target price of 869 per share.
Thank you, Somakshi, for covering those brokerage notes for us. Do keep an eye on those. But moving on to the pharma sector, Strides Pharma has sold its arm Stelis Bio manufacturing unit to Syngene, and this is at an all-cash deal at 702 crores. So let's go across to my colleague Harsh. She has more details on this to understand the specifics of the deals and, more importantly, how it will impact the financials going forward.
Well, yes, absolutely, Lisa. So we're looking at Syngene, which is acquiring the multimodal facility from Strides Biopharma. Now let's talk about the deal itself. It's the transaction is for a gross consideration of 702 crore. You're looking at a facility which covers both drug substances as well as drug products. You're looking at a transaction which should conclude in 90 days or so, of course, subject to customary checks and conditions. And you're looking at a consideration which will be paid by Syngene all cash. Now Syngene has around 1,000 crores on its balance sheet, but we'll come to that. Let's quickly look at what it means for Strides first. The Stelis unit suffered losses in any case, so there was some amount of a problem coming in. Vaccine sales of Sputnik have plummeted, and that's what's really causing a little bit of stress on that front. But Stelis remains focused to grow its CDMO business now, so that's where the focus will shift to. The Stelis board has appointed strategic advisors on the revival plan, and Strides Pharma has given corporate guarantees to the tune of 700 crores for that. Analysts also consider the corporate guarantees given to Stelis as a possible risk as well, but Stelis nonetheless expected to be EBITDA positive in FY24. So that's a positive coming in for Strides. Where Syngene is concerned, it adds to the capacity of Syngene, 20,000 litres of installed biologics drug substances added to the current capacity. The facility is now repurposed to manufacture monoclonal antibodies. So that's something which should add value there, and you're expecting this facility to be operational from 2024. As I did mention, Syngene already has cash of around 1,000 crores to 700 crore to be deployed on this particular deal, and another 100 crore to repurpose and revalidate the facility. They are expecting EBITDA margins to be in line with what the company average was, and you're expecting the acquisition will not materially impact the current financial guidance for FY23 and 24. So those are a couple of positives coming through despite the acquisition. Expect some minor dilution of operating margins, that's what's expected, and expect the plant to be positively contribute to bottom line in FY27. So that's broadly on this particular deal.
Okay, thanks Harsh for the details on the Strides and Syngene deal. But with that, we're completely out of time on this edition of Market Cafe. But don't go anywhere as the market takes all the action ahead.